All right, we're officially live. RTD Live Talk. It is a Wednesday night, 4th of the 11th of April. And so I'm excited to have a guest join me, a gentleman who has stormed us to the scene, doing a lot of great interviews. I've had a chance to catch some of your interviews, man. I'm very impressed with what you're doing and the amount of information you're bringing to the alternative media space. So my guest is from PortfolioWealthGlobal.com. His name is David Moadel. So David, welcome to RTD Live Talk.
Mike, it's an honor and a pleasure to be here. I can't believe I'm talking to you live right now, live on YouTube. YouTubers, what's up, everybody? If you have questions, feel free to ask them throughout the show. And I'm looking forward to speaking with Mike right now.
Definitely. So as I mentioned before, you know, when you go live, as I'm learning, it takes a couple of seconds to get everything warmed up. People usually get their little notifications on their phone, so they chime in every now and then. So I usually start off with asking, basically just checking in and see who's joining us. So far we got about a handful of people. And so as always, if you're new to RTD, I want you to let me know where you're chiming in from or where you're watching us from in the chat section. And so over the last couple of days or so, I've had more people chime in from places where I wouldn't have never imagined, people in Thailand, Afghanistan. And I'm like, wow, that's, you know, it's pretty good to have people from on the other side of the planet tuning in. So hopefully we got some new people over there joining us tonight. But as we are waiting on more people to chime in, David, do me a favor. For those that may not know who you are, give us some information as to how you got into this monetary financial awakening period for yourself, and give us a little bit of your background in this whole education realm that you're now venturing into.
Thank you, Mike, for asking. I really appreciate that. Yeah, so my name is David Moadel. I'm from PortfolioWealthGlobal.com. And I'll tell you, I've been an educator for a long time. I have a master's degree in education. I used to teach fifth graders, little kids, elementary school. And then I've also taught the high school and college levels. And I've been investing and trading for a long time. I have my own YouTube channel called Looking at the Markets. People could check that out. But I'll tell you, Mike, I've been approached by a lot of newsletters and websites in the last couple of years. But I chose PortfolioWealthGlobal.com as my home, mainly because they've been they were the number one ranked newsletter of 2017 for their cryptocurrency picks. Believe it or not, Portfolio Wealth Global picked Ethereum at 15, Litecoin at 25, Dash at 35, Cardano at around 4 cents. It would have been nice to get in at about that price. Wouldn't you agree?
Yeah.
So yeah. And they just the picks keep coming out. People just keep profiting from it. And Tom Beck, who is the founder of Portfolio Wealth Global, he became a multimillionaire in real estate at age 33. And I really identify with his core beliefs, which are that the government and the central banks might not have our best interests at heart. Talking about retail investors, the little guy. Right. They don't always think of us and what's in our best interest. The government is just getting too big. Central banks are just doing whatever the heck they want. And we need to find ways to identify and implement alternative investments, ways to get good yield without relying on the government's promises to come through. And so that's why I encourage people to check out the free newsletters and reports over at PortfolioWealthGlobal.com. But the important thing is I'm here with Mike at Rethinking the Dollar today, and it's amazing. I hope we get lots of questions.
Definitely. So more people are chiming in. So I want to dive right into what caught my eye today, especially. So I noticed that in the crypto market, which has been positioned as an alternative that a lot of people in the alternative media space love to talk about, especially when it comes to having alternatives outside of fiat currencies, aka the dollar. And so right now we're as of a couple hours ago, we're all green. So are we approaching a bull market, or are we still in the bear market? Or where are we at now, in your opinion, in this whole crypto market cap space?
Yeah, I'll tell you what, Bitcoin is something that has been crashing. It's true. It went through and probably is still going through, in spite of today's price action. Yeah, we're in a bear market for cryptocurrencies, for Bitcoin, and everything pretty much follows Bitcoin. Most of the top cryptos follow Bitcoin around. So yeah, we've had some rough times, but I'll tell you, I've been following Bitcoin since 2009. Now, if somebody got in near the top last year at around $19,500 or almost $20,000 per Bitcoin, yeah, what's going on right now is probably pretty scary. It probably seems like the end of the world, probably feels like that. But what we need to realize is that for those of us who've been around in the crypto space for a while, we've seen 11 crashes of 30% or more in Bitcoin. This is the 12th one we're going through right now. It recovered every time. Those past 11 times Bitcoin crashed 30% or more, sometimes up to almost 90%, some of them. It recovered every single time. It didn't always happen when we wanted it to. Sometimes it took a while, but we've had bear markets before. Will it get through this 12th one? Yeah, I can't predict. I think it will, since it did 11 times in the past. It just feels scarier now because, again, a lot of people just got into it. I'm bullish on Bitcoin and therefore bullish on cryptocurrencies for a number of reasons in 2018 and beyond. First of all, when Wall Street starts to, and hedge fund and institutional investors start to divert clients' money, when fund money managers begin to divert clients' money into the cryptos, that's going to make for a huge boost for Bitcoin and all cryptocurrencies. Also, when central banks start to buy cryptocurrencies for their own reserves, man, that's going to be a big one. And I do believe it will happen. Yeah. That's going to give a huge bullish boost to Bitcoin and other cryptocurrencies. And perhaps most importantly, when the technology catches up with what really needs to happen. See, there are many different blockchains. There's a Bitcoin blockchain, Ethereum blockchain, Litecoin blockchain, and so far. When the technology creates a way for these different blockchains to talk to each other or communicate with each other, so to speak, I can only imagine that Bitcoin prices will go up. And so will, wherever Bitcoin, because Bitcoin is like the mothership. Right. Wherever it goes, the other ones tend to follow. And so for those reasons and others, I believe that Bitcoin will reach those all-time highs once again.
Right. Now, just to touch on a more cryptocurrency, last night I had a live stream, and so some of the comments were about gold, saying that Bitcoin was as good as gold, or the idea of gold being attached to the blockchain in a way where either central banks would do it, whether it be some country out east doing it, or something happening in regards to people preferring blockchain technology, tokens or coins over gold. What's your thoughts on that?
Yeah, Mike, that's such a great question, because I get questions like that all the time in my email inbox. By the way, if people want to email me, they can contact me. It's David Moadel, Moadel, @gmail.com. As well as going over to portfoliowealthglobal.com. I'm over there as well. So yeah, people email me all the time asking, is Bitcoin as good as gold? Like literally, they want to know if it's as good as gold and silver and other precious metals. Cryptocurrencies, as important as they are, they're not digital gold. Bitcoin is a great medium of exchange. It's great for trading. It's okay for investing. It's not a great store of value in the way that gold is a great store of value. Remember, gold has been around for 5,000 years plus. Bitcoin is a newer technology. It has the potential to become a very efficient and usable form of exchange over the next few years, as it is right now. But nothing will replace gold as a store of value. Ultimately, the cryptocurrency markets, it's about big bets and big gains. You've got to find those under the radar cryptocurrencies if you really want to get those 10 baggers, which is what we do at portfoliowealthglobal.com. And actually, we have the newsletter. If people go on the homepage there and sign up, we'll let them know. I'll let them know about what I'm seeing in the cryptocurrency market and beyond. Yeah,
fair enough. Now, I want to dive into gold, because there's a question over here that I'll get to in a second. But my question in regards to gold is that just recently, a congressman decided to propose a bill, HR 5404. And so it's just sitting there stagnant as of now. But yet a lot of people in the alternative media world is really excited about the idea that it's been mentioned. But yet, do you think it's going to go anywhere? And do you think that the idea of basically giving gold and silver its legal, or giving gold rather, its legal status as legal tender in the form of being weight, just redeemable in paper, which it should be already, do you think that's going to be something that will get some play in the political realm, or will it get shot down before it goes any further?
Yeah, Mike, I don't know if you're as excited as I am about HR 5404. I put a video out on this. I was one of the first ones to do that because I said this is huge. This is something most people don't know about. And Mike, you're reporting on it here on your program. You're one of the first movers, as I try to be, letting people know about these important things. Yes, this is a bill, HR 5404. Look it up. Google it, do whatever you have to do, research it. It is a bill introduced by a congressman, and it has not passed any of the chambers of Congress yet. It has not passed the House or the Senate, has not gotten to the president's desk or anything like that. It's in the beginning stages. But if it were to pass someday, it would bring us back on the gold standard in the United States. Our currency would actually be backed by something, and something pretty darn good, as opposed to the fiat system. Just a little bit of background for people watching who may be just entering the gold space or the precious metal space. Richard Nixon took the United States off of the gold standard officially in 1971. And if anybody wants to go ahead and look at a chart of the dollar compared to pretty much any currency around the world. Mike, would you agree that it's pretty much been downhill since then?
Almost 100% as far as purchasing power lost. Yes.
Yeah. That's it. We all know what a dollar meant 40 years ago and what a dollar means now. It's not even near. It's nothing near the same. The highest gold price was around 1,900 per ounce back in 2011. Good times, right?
Yeah.
But good times don't always last, and trees don't grow straight to heaven. Unfortunately, there are bear markets. We talked about the bear market that's going on right now in the cryptocurrency space. Well, the gold bugs out there know quite well that there was a bear market starting around 2011, 2012. At around 2016, we finally started to see some relief. Thank goodness, right? And precious metals are starting to come back up. I'm talking about on a long-term basis. We've got gold right now in the 1300s, silver in the 16s. So, what's interesting? I'll tell you what, if anybody out there is holding the physical stuff, which I like to do, the physical gold, the physical silver, check the gold silver ratio. And of course, Mike, you know all about the gold silver ratio. I'm sure you check that frequently, as I do. Not enough people check that. Right now, the gold silver ratio is in the low 80s. It reached about 82. This has only happened 4 times since we went off the gold standard in 1971. So it's a rare occurrence. And it's huge because after the gold silver ratio reaches an extreme, like the high 80s, it has a tendency to retrace back to the mean, back to around 50. So what does that mean? That means that silver tends to outperform. No guarantees. I'm not a registered or licensed investment advisor. People have to make their own investing decisions, of course. Sure. But there is a tendency for silver to make a nice comeback when gold outperforms compared to silver so much, when it gets to that extreme level. So anybody out there who has gold and silver, the physical stuff, you may want to rebalance right about now, or at least consider it. Right. You may want to sell a little bit of your gold, get a little bit more silver, equal amounts, let's say. That's a great way to rebalance without having to lower the general amount of physical precious metals that you have. Now, another way to get into this is through the mining space. Yes, gold and silver, that's more slow and steady win the race. It's a great hedge, a great store of value. If you want some plays in the gold space and in the precious metals space that moves a little bit faster, people might want to consider getting into miners, which is not an easy, it hasn't been easy. It's been pretty brutal actually recently. But at Portfolio Wealth Global, Tom Beck, who's the researcher and the founder, he's put out a report that I think is amazing and can help people get into the gold and other precious metals mining space. And if people want to check it out, it's at portfoliowealthglobal.com/gold playbook. That's /gold playbook over at portfoliowealthglobal.com. And again, it's a report that has been highly rated by fund managers, and we're offering it to the public now. So people should check that out.
Sounds good. Now, let me ask you a question. Now, in regards to the ratio aspect, of course, as you mentioned 4 times since the pegging of the dollar from gold internationally. Now, let me ask you a question. Do you ever foresee a time where, some people mention about the parity of gold and silver ratio wise might end up being closer to 1-to-1 as opposed to it comes up the ground at 1-to-9? Can you see a time where it's 1-to-1 where people would actually prefer silver just because it has more utility or usage other than just storing and hoarding and things like that? What are your thoughts on that?
That's an excellent question, Mike. Yeah, I could see that happening. When the gold-silver ratio gets out of whack, kind of like it is right now, and not in a bad way, but just what I mean is when it reaches extreme levels, I believe in mean reversion. I believe things tend to come back to parity or normalcy or the mean. That's why it's called mean reversion. Things come back to their normal or average state, usually over time, not tomorrow, not next week. We're talking about people who are into buying and holding. And most of us in the physical precious metal space, we don't mind holding. We're a patient group of people, okay? We're usually not day traders or scalpers, as they say. So yeah, I foresee that happening. It could even happen in 2018, definitely by 2019, 2020, something like that. I don't see why not. Because again, when things get extreme, it feels like it's going to go up in that direction forever. It doesn't work like that. When things get extreme, they also calm down in time. So don't get me wrong, hold on to your gold, hold on to your silver, just maybe rebalance a little bit. Remember, silver is to be considered as gold's more volatile little brother, okay? So be aware that if you have silver rather than gold, it moves a little more, both up and down. So if you really want a great store of value, consider some silver and some gold. And I mentioned also the mining space if you want a little more excitement in your life and you don't mind the volatility.
All right, fair enough. Now, the other day I posed a question to my audience on a live stream, and so I'll throw it out there and let you sit on it if you need to for a minute. But the question was allocation. Of course, we're not able to give advice or tell people what to do with their finances, but we try to educate people that you need to do something other than just turn it over to strangers, let them do it for you. So The question was allocation-wise, I gave 3 categories. There's saving, speculating, and spending. And so if you would just hypothetically say if you had $100, and how would you allocate those funds according to what you are aware of now with all the information that you've gathered and studied and the education you received? What would you do with $100 if you had those 3 categories?
Wow, that's what a great question that is. So I have 100 hypothetical dollars, and I'm going to allocate percentages of it or dollar amounts to savings, speculation.
Speculating, I say speculating or speculation, being that I believe that the idea of conventional investing is going out the table. We're entered NERP territory, so everyone's chasing yield. So I say speculating because everyone is chasing yield. So we're basically taking risk. So between saving, speculating, and saving some for spending your daily cost of living, bills, things like that, how would you set $100 aside? Just give or take.
Let's say it depends how much you spend as a spender. But let's say if you can save as much as you can, spend as little as you can. That's a big part of it. We have to be self-sufficient, but don't scrimp on your education though. Education is huge. That's not frivolous spending. So let's say if somebody can manage to save 50%, or what I mean by that is only spend 50% of their income, that would be pretty good. If they can store away the other half. Now, so you're spending 50% of your income on rent, food, gasoline, your education, all that good stuff. Fine. So you got 50% left. What do you do with the other 50%? Well, if you can invest 90% of that in well-researched, reasonably safe, there's always going to be some risk, but you researched it carefully and it's good risk reward, income producing asset classes, great. So the other 10% of that 50% that you're investing can be your playground, as I like to call it, the speculative. Just have fun with it. Because what's the worst that could happen? Well, let's say it all goes wrong. You're only losing 10% of 50% of your paycheck that you make. All right, so that's 10% of 50%. That's about I can't even do the math. That's a very small portion.
Yeah, very small.
All right. Yeah. So, and that's where you get into, let's say you want to invest in really small companies. If you want to invest in maybe ICOs, IPOs, things like that. Whatever, just your lotto plays, as they like to call it. That's I call it the playground, because people come to me and they say, hey man, I heard about this crazy stock that's the super volatile. It went up 500% this year. How much should I allocate toward that? I'd say put that in your playground, put that in your speculative portion of your portfolio. And if you lose it, you lose it, and you won't get emotional about it, because that's when you start to lose in this brutal game of investing and trading, is when you start to have feelings about your investments. Right. The other 90% of your 50% that you're investing or trading, make that highly researched. And that's what I do. At Portfolio Wealth Global, we do a lot of the research, so you don't have to do so much research into asset classes, stocks, cryptos, whatever it is, precious metals, commodities that are going to produce income over time. You're not trying to make 500% overnight. Maybe eventually. Okay, I've gotten 5 baggers and 10 baggers before, and we'll continue to do so. But again, only after checking out the company, checking out the cryptocurrency, looking at the charts, looking at the fundamentals, making your own decisions. That should be most of your investment portfolio, the investment section of your portfolio.
Fair enough. Now let's move a little bit on to currencies, fiat currencies, where we're currently at now with the US dollar. So the whole idea of rethinking a dollar is designed so that people begin to question everything that's been considered conventional as far as just finances in general. Like I notice a lot that there's more people now, especially institutions as well as other non-alternative media sources, telling people to really invest in their financial education, and they geared it towards the millennials, telling millennials that they're not saving enough money. So I actually came across an article earlier today that was saying that millennials, why are they not saving enough? Why are they not saving enough? And so I kind of consider the fact that the financial institutions and the powers that be need more of the younger generation to set aside this money so it can keep this narrative going. And so give me your thoughts on just whole monetary awareness, financial literacy. Like, are we entering a phase where it's either you are completely aware of where your funds should go, or can you afford to continue to turn it over to people? Let's talk about the education side. How important is education at this point in time?
I'm glad you brought that up. Education is everything. Mike, you're giving amazing education to your followers and your audience. And I'm trying to do the same, both at looking at the markets over on YouTube and also Portfolio Wealth Global. Any money spent on financial education is an investment, and it's money well spent, because you'll get that back in droves. If you don't educate yourself, you know the saying, Mike, if you fail to plan, then you're planning to fail. I'm sure you've heard that before. Yeah. And so if you don't get yourself a financial education, then you are basically just planning to fail. That's all you're doing. Right. As far as whether millennials should be saving more of their money, I'm not, I'm not here to judge millennials. I'm a big fan of what millennials are doing. They're going on YouTube. Yeah. They're watching live streams like this, and they're educating themselves. Millennials out there, kudos to you. You're doing the right thing. Don't let anybody tell you otherwise. Could you save more money? Sure. Could you get more education? Absolutely. But you're also innovating. The Robinhood app, for example, I think that's a huge innovation. Mike, I don't know if you're old enough to remember back in the day, before E-Trade and all the online trading came along, you had to call up your broker on the phone, and it was $20-25 just to place a trade. Do you remember the good old, not so good old days there?
I do remember, and at that time I was too young to be involved in that sector, but yet my mom and dad, so I heard about things like that.
Yeah, those are crazy times. Now we've got the Robinhood app, we've got online trading. You can do it yourself. Mike talked about how you don't just want to trust your money with a money manager, okay? Because most money managers, around 80% of them underperform buy and hold S&P 500. You could, if you're going to do that, do it yourself. You'll do better, because most of these money managers, if you walk into a bank and say, hey, I want a fund manager, I want a money manager, they're going to underperform, buy and hold, and they're going to charge you 1 to 2% per year of not of what you make, of what you have. Okay, so you're going to lose 1 to 2% per year, regardless of how the money manager performs. They could lose money, and yet they're still going to charge you.
Right.
So why not do it yourself? But again, get the research. Avail yourself of the amazing research out there. And Mike, you talked about the dollar, and man, I'm telling you, the dollar is just the horror story of my lifetime, and probably the lifetime of most people who are in here. Again, since 1971, just the charts are a horror story. Even right now, the dollar is near a 3-year low. In 2017, last year, the dollar fell around 10% against the currencies of its trading partners. That's 10% loss in a year. Yeah. It doesn't take a mathematician to figure out that cash is not king. And so doing nothing is not a choice. Inflation, I believe, is just going to get worse. And you've got to find ways to get yield. You got to find ways to cash in on opportunities, not by going into a bank and asking for a money manager just to rip you off, not by rolling up your dollars into a mattress and just leaving it there and letting the dollar go to nothing, which is where it's headed. And not just by putting it all in Bitcoin either. I like Bitcoin, but you got to diversify a little bit, because people who put it all into Bitcoin when it was 19,500 or 20,000 just to watch it go down to 7,000, they saw what happens when you put all your eggs into one basket. So I want people to be careful. Again, we're doing the research at portfoliowealthglobal.com/money. That's portfoliowealthglobal.com/money. There's a huge wealth of exclusive reports on there. In fact, all of our reports have been aggregated on that /money page, where people can avail themselves of all the research we're doing. And these are free, by the way. So why not go over there and check it out?
Yeah, good point. Now we have we are streaming live, so we have quite a few people tuning in. So as always, there's a number above my head, 833 live RTD. If anyone wants to call in directly and ask a question, feel free to do so. We're taking questions. My phone line is waiting for someone to call. But I do have a question for you, David, from Jesse in the chat. And it says, Mr. Moadel, which is more probable, moving to cashless transactions or issuing currency in bigger, degraded denominations like in India?
India is, other countries, Argentina, they're and Europe, they're just generally speaking, they're ahead of the game. So I'd say the second one. Things are going away from cash toward crypto, and you know what? I'm happy about it. I hate to say it, but in America, in the United States, we're not catching on as fast as we should be. Why isn't Amazon accepting, not just Bitcoin, but they should be accepting multiple cryptocurrencies by now? Why isn't Walmart? Why isn't Target? Why can't you go to the mall and buy everything with not just Bitcoin, but multiple cryptocurrencies? And there should be ATMs right there, right, for you to get the cryptocurrencies if you need them. Why isn't that happening yet? I mean, look at wire transfers. Cash wire transfers take 3 to 5 days. I mean, come on, it's lagging. The blockchain will change the world, is changing the world. So yeah, I'd go with the second of the two right there. I'd say that's going to happen first, and it's going to be a lot more important in our lifetimes. Millennials, I'm proud of you. You're on the forefront. Millennials have such a great attitude about cryptocurrencies. Unfortunately, people in my age bracket, we're catching on a little slower, but hey, we're going to get there. Once you see at the right there in Walmart, at your grocery store, wherever you are, once you see not only Bitcoin accepted here, but Ethereum and Litecoin and others that we probably haven't even heard of yet accepted here. In fact, when we get to the point where they don't even have to say that anymore, where it's just assumed, and that people don't even want to bother with cash because they trust the blockchain, man, it's going to be good times for everybody.
Yeah, that's a good point there. Now let's talk about a little bit about this government debt. I read an article saying that we're going to reach our $1 trillion deficit 2 years sooner than expected. So that means that our government is going to be doing more borrowing. And as of now, we have China mentioned that they may stop buying our treasuries. So we have the bond market, which is very chaotic right now. So let's talk about the debt. How much more can we continue to live upon the taxpayer's credit card that's in a deficit right now? So the bond market is going to be in trouble. Share with me your thoughts on future as well as current issues surrounding us continuing to borrow, and how farther can this thing go?
Wow. Yeah. Where do I even start? The debt to GDP ratio is over 100% right now. And that may not sound important, but it is. It should not be over 100%. Think about what that means. The debt to GDP ratio is tilted in favor of debt over what we're producing as a country. So that's kind of like somebody who spends more than they have and more than they can make for the rest of the year. They've already spent it. And by the way, it's not necessarily you. It's not necessarily me. It's not necessarily anybody listening to this right now. It's usually the government's doing this. But the people who represent us, supposedly, I put that in quote fingers.
Yeah.
And you mentioned treasuries. A treasury is a promise made by the government. And imagine this, Mike. The promise of the government is not working out so great. Can you imagine that being true?
Oh my goodness.
Yeah. The bond market is toxic right now. The mainstream media is not talking about this. This is why we have to go to my channel and your channel. People are on right now, so they can look at the alternative media. They can look at YouTube, because mainstream media is just not going to talk about how toxic the bond market is. I believe bonds could crater right now or very soon up to 40 or 50%. That would not surprise me at all. I know that sounds drastic, but I really believe it, and our research points to it. And even if you don't own bonds, if you think that this bond talk is this possible cratering of bonds is not going to affect you, it will. If the bond market crashes, the stock market is very likely going to go right down with it. So pretty much no matter what you own, except for maybe certain asset classes, precious metals, that kind of thing, it's going to go down. And we talked about how cash is not going to protect you very well either. If anybody thinks that bonds, treasuries are risk-free, I love how they call it the risk-free rate, the bond yield, the coupon rate. Yeah, you're wrong. It's not risk-free. It never really was. Maybe when I was a kid, it was. I remember back in 1981 when treasuries 10 years yielded around 16%. Those were the good old days, right? Yeah. Good times. Yeah. But since 1981, bond yields, also known as coupon rates, have just gone down and down and down until they bottomed out in 2016 at around a little bit over 1%. It was around 1.37%, something like that. Treasury yields 10 years. That was insane. But that was the bull market in bonds, because if you already owned bonds, then you did okay during that period. But bull markets, any bull market, doesn't last forever. As we said already, trees don't grow straight to heaven. Yeah. Lately, there's been the normalization of bond yields when they went down to barely over 1% back in 2016. Now they're heading back toward 3%. Okay, so that's normalization. That's when, again, the bull market could not last forever. So now that we've got normalization of bond yields, and also now that we have inflation, which is just out of control with the central banks all over the world printing money like there's no tomorrow. If somebody were to own bonds now or were to buy bonds now, they're only going to see, as I mentioned before, for those reasons and others, a cratering of the value of their bonds. Please don't buy bonds, whatever you do. Find other ways to get yield, okay? It's not risk-free. It's a promise from the government. It's a promissory note, and that promise is crumbling. Whether you're a saver, a retiree, or thinking about retiring, an investor, millennial, and you're not going to retire for another 50 years, whatever it is. Yeah. The promise of bonds, along with the promise of many government promises, Medicare, Medicaid, Social Security, pension funds, crumbling, and will continue to crumble. So don't count on the government and the central banks to hold your hand and let you know it's going to be all right, because it's not. We have many reports over at portfoliowealthglobal.com. If you go to /bonds, that's portfoliowealthglobal.com/bonds, BONDS. We'll give you the full story on bonds, what to do, what not to do. And also, we'll give you some ideas on how to make better yield, let's say 8 to 12% potentially, and much safer and without that government promise that might not come through for you.
All right. Now, let me talk about the Federal Reserve. So they're in the midst of trying to hike rate. And so they have their little dot plot chart. And so they've gotten off track with that. So in your opinion, why are they looking to raise rates at a steady pace from this point on? Are they trying to position themselves so that when the official recession is announced, that they can then have some options to counter the side effects of it? What are your thoughts on that?
Yeah. The estimate was, or the common wisdom, which, it's not so common, was that there would be 3 rate hikes in 2018. It's interesting. We have a regime change. We've got Jerome Powell at the head of the Fed instead of Auntie or Grandma Yellen, as I used to call her, instead of Janet Yellen. Before it was Bernanke, before it was Greenspan, before that it was Paul Volcker. It doesn't matter who's in charge. It's still a broken promise from the government. These things are not going to change. People ask me, "Oh, we got this person in power now, as opposed to this person." Who's the face? Whoever the face is of the Fed, of the central banks, and of the government, it doesn't matter. It's a broken promise. Yes, they're normalizing rates. It was bound to happen. They're breaking the promise that you could retire with safe yield from bonds. They're just going to keep raising it. And when things do get haywire, when things go haywire, as you alluded to, with the recession, which I think there will be a stock market crash coming sooner rather than later, bonds are not going to help you, because these things, when there's a massive meltdown, do you really think that stocks will be okay, but bonds won't? Bonds will be okay, but stocks won't? No. It's all going to melt down, and you have to have some store of value, and cash is not going to save you either, as we talked about before. You've got to find ways to get yield, and you've got to diversify. Don't just put it all into one thing, and research, find things that can withstand a meltdown. You want to think for yourself. You want to don't rely on promises that just get broken over and over and over. The Fed, yes, they're going to keep raising rates. They're not doing it to help you and me. They're doing it for their own purposes. Imagine that, okay? And you got to do this on your own and with the help of research, not only from Mike here, who is a source and needs to be a source for everybody watching this. But also at a Portfolio Wealth Global, we're looking for alternatives to bonds, the dollar, the stock market in general, just buying and holding, and we're going to keep coming up with them, and we're going to keep putting out that newsletter so people can benefit from it.
All right. Now let's move a little bit beyond our borders, because there's so many things that that impacts us indirectly, and it has to do with the Eastern nations. We have Russia, China. What's happening in Syria, and we have all the fuss over North Korea. So let's talk a little bit about geopolitical events. So right now there's missile ships that's right off the coast of Syria, give or take. And so Trump has recently mentioned about, he does a lot of tweeting about things that most presidents in the past, would never do and say, for that matter. So give me your thoughts on how serious of a matter this can be, if you consider it serious, or give me your thoughts on where we're at right now in the political front and the possibility of war.
Yeah, I think it's posturing. I think that's how, and this is not a political statement for Trump, against Trump. I know that you're not all about trying to polarize people, and I'm not either. People's political beliefs are whatever they are, and I totally accept them. But I think things that we can all agree on are that Trump is vocal. Mm-hmm. He has opinions, very strong ones, and he likes to posture. He likes to threaten. And remember, this is a man who wrote The Art of the Deal. You remember that book back in the day from Donald Trump? And part of The Art of the Deal for Donald Trump is posturing, is threatening. It's kind of that art. Remember The Art of War? Yeah, that old text.
Yeah.
Where you have to know when to posture, when to threaten, when to shake hands, when to negotiate. And Trump does it through tweets, through, yes, some rhetoric, but that's how he negotiates. It's the same with the trade war. The market is going, if you look at the S&P 500 chart, it was calm throughout 2016 and 2017, a steady rise. And now it's just looking like a cardiac arrest on the charts. It's responding to every tweet, every pronouncement from Xi Jinping or from Putin or from Trump. And they're all posturing now. They want to see who's going to win this arm wrestling match. All right. I don't think that anybody can afford war. Anybody who has to face re-election, anybody who has to face the popularity contest that is politics, nobody really wants war, but they love to posture in a way that makes us feel like we're accomplishing something. Maybe it will. Maybe we'll, yes, get a better negotiating position with China. Okay. Maybe we can enhance our posture in the world by threatening missiles in Syria, that kind of thing. Whether it actually happens, I don't think that's how Trump works necessarily. I think he only would go to war if it were absolutely necessary. I don't think he wants that in his first term. I think what he wants is just to, do the art of the deal. And this is how he does it. What's going to happen, whether it'll be successful or not, remains to be seen. We're still in the beginning stages here. We'll see how this plays out. If you're an investor, I would say don't be afraid of every headline. You don't even have to watch every headline. Yes, read the news, be aware of it, but don't react to, trade war possible. This tweet. Possible. Somebody mentioned missiles in Syria. You got to have a plan, do your research. Slow and steady wins the race. So stick to your plan. Warren Buffett stuck to his plan, and look how he's doing. I think he's doing all right. Yeah. Ben Graham stuck to his plan, and guys like that who really did amazingly by not following every single headline in terms of your trading and investing.
Yeah, good point there. Now, so outside of those events there, we have the repositioning of the yuan as a internationally traded instrument now, and so it's redeemable in gold eventually. And so give me your thoughts on that, and how will that really impact the Federal Reserve note, or will it dethrone the current reserve currency right away, or will it take time? Let's talk about the Petro-yuan a little bit.
Yeah, that's a great topic, not talked about enough. This is part of let's a little bit of a background here. Recently, in March, China, Xi Jinping and China introduced futures trading for the Petro-yuan, meaning the yuan as a means of trading oil futures to both domestic and international traders. That may seem a little complicated and not like a big deal, but it's part of an ongoing trade war that's been going on for a long time now, long before Trump became president, and even before Obama became president. This has been going on for a long time. Many nations would love to see the United States dollar get knocked out of its position as the world's reserve currency, which it is right now, like it or not. It's starting to happen, though. We're starting to see, the euro, the yuan, and cryptocurrencies are all threatening the dollar's hegemony. And you know what? I'm fine with that. I don't know about everybody watching this right now, but I don't think, even as an American citizen, I don't feel a need for the dollar to be king, because as we spoke about before, cash never really was king, at least not since 1971, since we got off the gold standard. Yeah. In terms of oil, China has recently surpassed the United States as the world's largest importer of crude oil. That means China is importing more crude oil than the United States at this point. So that gives China a strong voice in the global oil markets. So what? Well, that means that China futures trading could pose a threat, and is posing a threat, to the other current means of trading, which is Brent futures, which are traded in London, WTI, that's West Texas Intermediate, oil futures, which are traded in New York. Yeah, China has now its yuan-denominated oil futures contracts. That started on, let me see, Monday, March 26th is when it started. So not that long ago. It's part of a big trade war. And if people gravitate, if it takes off and people gravitate toward the Petro-yuan as a major means of trading oil and oil futures, that could be the beginning of the end for King Dollar. And you know what? Not such a bad thing. I'm okay with that.
Yeah, now overall, the idea, we all know the dollar's coming down on its last little home stretch as a confident-based currency in the first place, but domestically back here, if everyone stops buying treasuries or dumping treasuries, selling treasuries, central banks begin monetizing all this debt. So we're going to have, can you see a time where if everyone basically turns their back on our currency, that there comes a time where there's a hyperinflationary environment within our countries? And, you know, is that possible? And what would that look like in your opinion? Would it be just as bad as Venezuela or worse or what? What are your thoughts?
It would be tough to get as bad as Venezuela is right now. Nothing against Venezuela, nothing against the people of Venezuela. It's the government, the system over there. It's just horrendous. Go ahead and Google that, Venezuela economy right now, and you'll see what I'm talking about. But it could get there. I could see that happening. At Portfolio Wealth Global, our research indicates that by the year 2023, we'll see between 4 to 7% inflation year over year. That's almost unimaginable to Americans. We're accustomed to reasonably decent buying power for our dollar, but that's crumbling. The dollar, as we spoke about before, is devalued every year. The inflation rate is between 2 and 3% now. It may not sound that bad, but that means that if you add it up over time, every year, year after year, and if that hyperinflation occurs, if we get to between 4 and 7% year over year inflation, meaning your dollar that you hold in your hand or in your bank account is worth 7% less every year, imagine what it'll be worth. Imagine what a gallon of gas would cost, gasoline. Imagine what your groceries would cost. Again, check out Venezuela, see what they're going through right now. And we can understand why cryptocurrencies are becoming more popular worldwide. I'd really like to see them catch on more here in the United States. And that's why I'm so happy with millennials, because they're catching on so quickly to cryptocurrencies. You guys out there who are millennials, be proud of yourselves. You're willing to educate yourself. You're watching these videos. You're watching Mike's program. You're watching my program. And when the hyperinflation does happen, whatever you have, bonds, stocks, it's not going to look good. And that's why we're putting out that research there. I encourage people to check out portfoliowealthglobal.com/crash. That's portfoliowealthglobal.com/crash. Check out that free report. It's going to give you an idea of what could happen if we have this kind of meltdown that we've been talking about, which I think will happen sooner rather than later, and what you can do about it to position and prepare yourself beforehand, because the preparation, you can't make it happen once the meltdown has started. By then it's too late. You need to prepare yourself now.
Right, good point there. Now, I feel like I've neglected some of the chats because people been asking questions. So let me get to a couple questions.
Yeah.
As always, 833-LIVE RTD. Call in and ask a question directly if you want, but I'll read off some. And so let me scroll up a little bit. It says, Mike, gold broke out today above its 52-week high. In fact, it's above the price it traded at 20 months ago. My question is, what is the cheapest way to invest in gold right now?
Yeah. Well, the cheapest way to invest in gold right now, I'm always a big fan of buying the physical gold, although I'm tending towards silver right now, as we spoke about before, because the gold-silver ratio is so high. So I'm rebalancing in favor of physical silver over physical gold, but that's just a rebalancing thing. I like both. Yes, gold broke out, but let's not bury the headline, which for me is that silver broke out. I've been watching silver in the 16s for a long time now. And yeah, today was a huge day. Not so great for the stock market overall, for the S&P 500. What an interesting day today. If I'm sure, Mike, you were following the markets today, and I'm sure the listeners were as well. We gapped down in the S&Ps and in all the indexes, the Qs, the NASDAQ and the Dow gap down, and then looked like they were going to go flat or even green briefly, and then right back down. It was a head fake. The market will head fake you. Whereas if you're into precious metals, you can be slow and steady wins the race with the gold, the silver. Is that a cheap way to get in? Well, I mean, is gold ever cheap? Silver is another way to get in, and silver is, I believe, inexpensive, relatively speaking, to itself and to gold right now. And at portfoliowealthglobal.com/gold playbook, that's /gold playbook, we can tell you some really great ways to get into the precious metal spaces without, if you don't want to buy the physical stuff, or maybe you already have some and you're looking for something that really is going to move. We've gotten those 5-baggers and 10-baggers before, so we can show you how. So check it out; it's right on the site there.
Good deal, good deal. Now, as we draw towards the end of our conversation, I'm kind of disappointed in my audience that no one has called in. Usually someone calls in by now. I usually have some regulars, but we're going to keep it moving. So I want to talk a little bit about cryptocurrencies as we draw towards the end.
Sure.
And so in your opinion, outside of the conventional, the name brand cryptocurrencies, can you sneak in at least one probably under the radar current cryptocurrency or token that excites you that you'll be willing to share with us?
Absolutely. I have a tendency to look at the top 10 or, even top 20. If you go to, Coin Market Cap or World Coin Index, if it's not in the top 10, top 20, then I'm sometimes not suspicious, but I know I need to really research it more heavily. I'm actually a big fan of Bitcoin Cash. I don't know why people don't talk about Bitcoin Cash more, as if it's a redheaded stepchild or a little brother of Bitcoin. Yeah. I think it's huge because it really is intended to be a way to spend your money in the retail space and elsewhere. I'm a huge fan of Cardano. At Portfolio Wealth Global, we called it at around 4 cents. Would have been nice to get in around then, right? Yeah. And even though all the cryptos have crashed somewhat, if you got in when we made our calls, you would have done pretty darn well, even with the crash factored in. So think about Bitcoin Cash. Think about Cardano. Monero is a huge one. And these are not obscure, but I think they're not reported on enough by the mainstream media. The mainstream media and coin, for example, Coinbase. On Coinbase, what can you trade? The top 4. That's about it. Hopefully that'll change soon. But I think things like that and the mainstream media lack of reporting make it sound like you only have 3 or 4 choices to choose from. Look at those in the, I would say, top 10, top 20, but consider Bitcoin Cash, Monero, Cardano, consider others, but research the heck out of them first. Don't just load up. Yeah. Research makes you rich over time. All right. So whatever you do, don't take it from me. Don't take it from anybody. Check out the research, check out the website. I think you'll do well over time.
Sounds good. Now, one of the last questions. So you gave us a little hint at possible under the radar cryptocurrencies worth taking out. Now, if we ever reach an inflationary environment, any companies that you would recommend that might be a good place to park a little money that might do well in an environment where we reach an inflation type or serious inflation? Any recommendations you might want to give us?
Yeah, I mean, is there any safe space when hyperinflation happens, or is it going to be a Mad Max type of situation? I think it'll be, or will it be a Venezuela type of situation, as we talked about before? I think, well, let's not even talk about finding a safe space when that happens. The time to hedge your bets is now. I imagine that people will rush into precious metals. And if you're the last one on the bus, then you pay the most. So don't be the last one on. There's nothing wrong with some gold, silver, platinum, zinc, and others in order to fatten up your precious metals holdings. Yeah. We actually have a report on that. portfoliowealthglobal.com/zinc riches. That's /zinc, ZINC riches. Where actually we identified a company, and I'll spill the beans right now. It's Zinc One Resources. Zinc One Resources. That is a stock that I'm favoring right now that I think would do well. in that type of situation. I'm not going to give away the stock ticker and all the research right now. People can go to the report over at /Zinc Riches. But I think that'll be a good one. Hold on to your cryptocurrencies, I would say, because I think that'll, as an alternative or as a threat, if you will, to King Dollar, I think people will turn to those like they have been doing in Venezuela and elsewhere. I think whatever you do, don't get bonds and don't just stick your money in the S&P 500 or another index. You got to be nimble. You got to be picky. Pick and choose. Pick those things that will survive a market crash, hyperinflation, when you know what hits the fan. You got to do these things beforehand, though, and now is the time.
Yeah. Well, David Moadel, it's been a pleasure to have you join us for a live stream. And I apologize for no one calling in. That's not usual on this program, but this could be that night for us. But I appreciate you once again sitting down with us, and definitely will continue to follow what you do there. And as always, I wrote down some notes or some things I got to get report-wise. So thank you for sharing that with us. It's always great to have tools and resources people can reach out to and get further educated on certain matters. So anything you want to leave us with before we sign off officially?
Well, thank you so much for having me on here. Folks, if you're not subscribed to Mike's channel, hit that bell, all right? Smash the like button, smash the subscribe button so you can get more updates to what Mike is doing over here, because he's putting out the real news, not the mainstream media. He's doing it for real. You can find me on, just type in David Moadel, Moadel, into YouTube. You can find me. Head on over to portfoliowealthglobal.com well, first of all, the homepage, and also /money. That's portfoliowealthglobal.com /money. All the reports are on there. So if you didn't get to write down all of the links, which hopefully Mike could put in the description there, and I'll email that to you, so you can do that if you want to. But just go to /money and go to the homepage, get the newsletter. And if you got questions for me, I'll be glad to help you. It's David Moadel, Moadel @gmail.com.
Well, David, thank you once again. Everybody, it's been great having you guys tune in. Someone mentioned about dropping a call in, and if you see the number, so we do have a call. Dave, you got a minute for a call?
As long as you want, I'm here for you.
Okay, let's see what the call. Hello, caller. What's your name? Where you calling from?
Hi, my name's Abby, and I'm calling from Canada.
Hello, Abby from Canada. What's your question? What's on your mind this evening?
I just want to ask David if he happened to know, with regards to Venezuela, does he have an idea of whether people in Venezuela, as the situation is there, are they turning more towards gold or are they turning more towards crypto by any chance, if he happens to know?
Good question. David, did you
Thank you.
My pleasure. Thanks for calling.
Yep, I heard it loud and clear. Thank you, Abby from Canada. Boy, I envy you if you're in Canada, because they have such a great attitude toward marijuana and marijuana stocks, which is a whole other topic. But and you guys have are really on top of it with Canopy Growth Corp and Aurora and all those Afria, great companies. So yeah, you asked about Venezuela. Of course, I cannot speak to what it's like living day to day in Venezuela in a hyperinflation type of situation where the government just doesn't seem to care that much about the what the common folk are going through right now, and it's almost unimaginable over there. Again, just go ahead and Google it, Venezuela economy right now, and you'll see what's going on over there. They are looking at cryptocurrencies right now. The people are looking to cryptos. I don't know about more than gold, because gold just has that trust. Mm-hmm. It has the trust factor. I believe in the cryptocurrency space, but to get people maybe my age or older to really buy into it, that's a tough sell. Mm-hmm. So right now, gold still probably is the safest hedge. It probably is the safest store of value, just because it's been around for over 5,000 years. Right. So yeah, I would say people probably believe in gold first, but that's changing. That's changing as Bitcoin becomes part of the common vernacular worldwide. We see it on CNBC, we see it on MSNBC now, we see it on Fox News. That wasn't happening in 2009, not so much. So yeah, I'd say gold has that that trust, but I'm telling you, Bitcoin and cryptocurrencies are gaining, and they're going to be a nice alternative to gold. Again, not as a store of value. It won't compete necessarily. Cryptocurrencies, in my opinion, are not quote unquote good as gold in that way as a store of value. They're not digital gold, but I think they are gaining trust, and I'm okay with that. I'm good with it.
Yeah. And also, I would want to chime in that I believe that in Venezuela, in particular, the idea of getting a hold of gold or silver may not be as easy as it is for us here, because I would imagine they don't have gold stores, gold coin shops like we have on every corner here in the United States of America. So I would imagine that people are probably turning to crypto because it's basically on their phones. They can do transactions electronically on their phones, and it's probably easier to get a hold of because it can move, you know, without having to actually have a physical in your possession. So I would imagine crypto is doing really well in that down in the area for those who can get a hold of it. So, but David, I did live up to my promise. I got you one call, my friend. So we did get a call. So I thank everybody for chiming in. We're about to sign off. It's been an hour, so that's usually the time limit I put there. So David, once again, thanks for joining us. Look forward to following your work continuously. Good job of doing what you do. And let's keep spreading the word and waking as many people up as we can, my friend. Thank you.
Thank you so much. Hope to be back on here soon. Hit that subscribe button on Mike's channel. Do it. Do it.
I appreciate you, my friend. Everyone, have a good evening. And I will see you again for another live RTD chat, probably tomorrow night. Enjoy your evening.